What's up, guys? I hope you're all having another blessed weekend today. And boy, did a lot of things happen since last week's episode, particularly in the gold and silver market, and we got a lot to discuss today, so let's get right at it. Now, about a week ago, last Thursday, in fact, I shared on the Discord server that I thought we were at an interim top for both gold and silver, that Bitcoin had already topped out at $1.26 on October 6th, and that SP likely topped out earlier at around 6,800. Now, all of this kind of has been true, particularly with gold and silver, with the S&P eking out a higher high on Friday with the CPI data that came in a little soft. And we'll talk about all of this, but I think what I want to do today is to incorporate everything else going on around the stock and financial markets, because you can't just look at the stock market in a microcosm. And there's a whole lot of things happening around the world geopolitically that influence what's happening with the stock market. And so you need to incorporate and take a step back of what, the overlying architecture of the ground is in order to have a better understanding of the direction where we might be headed. And I haven't done that in a while. So today we'll spend a little time in updating since the last time I did this to give us a better rudder in the direction we're going. And I'll also talk about where I think we're going in the short term in the following week. Now, the last time I talked about it was about a year ago, where I created this episode that the factory reset of the world is coming, and that it's coming in an accelerated fashion. And it's true, and things just have accelerated even further. In that episode, I talked about how Trump got elected, which nobody thought. Trump won happened, which nobody thought was going to happen. Then Brexit happened, which nobody thought was going to happen. Then Russia invaded Ukraine again, something that people didn't think was going to happen. That happened, and then Iran fired missiles, the first salvo, which most of the missiles didn't do any damage that first time, into Israel, which again nobody thought was going to happen, but it happened. And so there was all these impossible things that people thought would never happen that just kept happening in sequence, and the time in between each of these impossibilities happening kept getting shorter. Well, let's take a look at what has happened since that last year. Well, first of all, we had a situation where, essentially we had an assassination attempt of now President Trump back when he was still campaigning, which was a crazy setup and perhaps cemented the deal of him becoming the president of the United States again. On top of that, we had a situation where the Iran-Israel conflict escalated even further, with more bombs sent by Iran into Israel, and this time causing actual damage to buildings and infrastructure in Israel, ending with the United States sending stealth B-2 bombers with the bunker busters to blow up Iran's nuclear program, essentially, which to this day is unclear whether or not it really did. Then we have situations within the United States where, and this is part of the whole civil unrest and division, where the president has unleashed military forces, the reserve, into cities for security reasons in Chicago and in DC. And so this has happened, which is something you don't really see, right? But it's, again, one of these impossibility things happening. And then, as we all know, we had this shocker of the tariffs that we're still muddling through. It started back in March, April, and we're still muddling through it right now. And that's playing a huge factor into the markets to this day. So if you take a step back and look at all these things happening, they're happening, and this is just within a year, right? They're happening more frequently, and I would assume that this cadence is probably going to continue, which means we need to understand, well, where is this all heading? Because that might give a clue to basically where the markets may be going, and also how one could prepare oneself for what's about to come, right? So you're not reactionary, because if you're playing the reactionary game when stuff happens, it's too late already. It's too late. You can't do it. You're one of the many. What you need to do is try and prepare ahead of time so that if it does happen, you're set up, right? And you can quickly take action. You're not stuck thinking about what to do. You already have your plan set out, and you're just pulling triggers at that point in your life, which is the way I'm positioned with myself, which is why I don't have a job. I've secured financial independence, and all these things that I've done, moved to a country like Singapore and all this stuff to prepare, right? So in the event that something happens, I'm just pressing buttons because I've already figured out what I want to do in the event something would happen. And I'm not scurrying around trying to come up with a plan in the last second. Now, if we move on to the next section, which I'm going to talk about, which is basically the geopolitical situation, which matters, right? As I said earlier, we don't really know what happened to Iran's basically uranium enrichment program. Did they ship all their, uranium that they were enriching somewhere else? Did it go to China? Was that those funny planes that arrived? Or did they send it to another place within Iran that, the West didn't know about? Unclear. But I bring this up because every time we have an eruption between Israel, Iran, and the US, and then it dies down, the pattern has been there's another eruption that happens about a year later, something like that, but the next eruption is even more serious, right? And then that dies down, and then what happens is you have another eruption, which is even more serious. If you think about the whole Iran-Israel thing, I mean, that started with the blowing up of the embassy in Damascus, right? Where Israel blew up the Iranian embassy in Damascus in Syria, and that kind of triggered off the tit-for-tat that escalated to the B-2 bombing of the nuclear site in Iran. And so that was the last escalation, and it went down. But if you think that was it, and there's no more after that, and no more ever, you're sorely mistaken. Guaranteed there will be the next eruption. And also guaranteed that that next eruption is going to be that much more of an eruption than the previous eruption. Make no mistake, that is heading our way. And to think otherwise would be foolish, just given the track record and escalation path we've already seen in the past couple of years. So I bring that up because that is a geopolitical instability in the Middle East region that we need to keep an eye on and understand will erupt again, probably sooner than later. Then we have the situation of proxy pawns being played in the larger geopolitical situation, one of which is Venezuela. Now, there's a lot of talks about the U.S. invading Venezuela. And, we have to understand that Venezuela is one of the countries that can produce a lot of oil. But right now, if you look at the blue part of the bar, it isn't actually a big chunk, right, of China's imports. Big chunks are Iran and Russia right now, which we'll talk about. But Venezuela has a place with China, and the reason is it has the potential, right, in terms of actual reserves to produce a huge amount of oil, more than Saudi Arabia and Iran, okay? And so this is a strategic asset and partner to China. So if U.S., also for the U.S., but it went sour, right? And now U.S. is kind of saying that, fentanyl's coming in through Venezuela from China, and there's all this riffraff going on around Venezuela. But underneath it all, if you just see the oil reserves that Venezuela has, I mean, that's it, right? It has the potential to produce a lot, and as a result is a strategic asset. And why China is very careful with Venezuela and monitoring what the U.S. is doing over there, because it is a strategic asset for both countries, right? And if the U.S. tries something with Venezuela, make no mistake, that's going to be in China's radar and factored into China's overall policy response and what's going on in the world today. Now, speaking of China, one of the latest things that has happened is that the United States has put, as part of the whole tariff escalation thing, where China did the rare earth thing, which I'm going to talk about, the U.S. has put sanctions on Russian oil, particularly in the top two oil-producing companies of Russia, including Lukoil, and basically said, if we catch you trading oil with Russia, we're going to, ban you, basically, right, and fine you. And so China's actually, the public sector of China's oil purchasing side has actually pulled back. But that's actually a much smaller than overall China's purchases, which is the private sector, and that hasn't pulled back yet. But at least as a signal, it has, for the public sector, pulled back its oil purchases from Russia. Now, this is one of the United States cards it has in the game, right? Is to sanction, to weaponize sanctions, particularly with Russian oil, because it serves a dual purpose of the whole Ukraine pressure with Putin, and also tightening the grip in China with its negotiations that Trump is going to be having with Xi in South Korea in a week. And so it has a dual purpose, and it's a good strategic move and card to play by the United States. And so we'll see how this plays out, but I'll show you and share with you what my opinions on all this has. Because if you look at it, why am I bringing all this up? If you recall, what happened with World War II, okay, was the United States essentially just cut off oil to Japan. That's kind of what the US did. There was already other wars around the world going on in Europe and all that, but the United States kind of like cornered Japan and cut off its oil supply essentially. And then that basically resulted in Japan like just going berserk and doing the whole crazy Pearl Harbor bombing. But that was what caused that part of World War II to explode, was the constriction of oil to Japan, causing Japan to do something pretty crazy and bomb Pearl Harbor. And I'm bringing that up because we're playing a similar game here. We have to be careful. We're playing with oil to, it's obviously not Japan now, but we're talking about countries like China as a consumer, largest manufacturer in the world by far, also as a result, largest consumer of oil. You're starting to cut that off by saying any oil, which obviously, as I shown earlier, a chunk comes from Russia and Iran to China. That is going to start tightening the screws to China on its oil supply. And this is not a road you want to start going down to, right? Because we saw where this road can eventually lead to if you keep escalating things towards this path. Now, here comes the main thing that I want to talk about and why this whole geopolitics is important. China recently, as you know, has put in these restrictions on rare earths. Now, I'm not going to go into all the details of what rare earths are. There's many YouTube videos out there that describe it in very well. The fact that it's not really rare, the fact that it's all in the processing of it, that China controls 90% of it, so on and so forth. You can look at those videos and educate yourself about it if you don't know. If you know, then you know. But the point I'm making here is many people haven't made this realization yet. Okay, they talk a lot about it, but the switch hasn't flipped in their heads yet. For some it has, but for most in the public it has not. And that switch, which I'm going to just tell you right now, is that rare earths is essentially the same thing as oil, but for the new digital and electrified world that we live in. Okay, the combustion engine and steam engine was before. Now we live in a digital and electrified world with electrical motors, with semiconductors, and so on and so forth. That is our current world, right? And in this world, rare earths is essentially the equivalent to oil of the 70s. That hasn't really sunk into many people's minds yet, but that is absolutely the truth, because if you know, without rare earths, without neodymium magnets, without all the rare earth materials, you cannot, right? You cannot do semiconductor manufacturing. You cannot build all of the electronics and electronic motors that are required to basically create the digital and electrified world that we live in. Everything will just stop, essentially, right? Literally will stop. If they won't do this, but hypothetically speaking, if China literally were to just say stop rare earth exports to the world right now, everything would stop. You wouldn't be able to make iPhones, okay? You wouldn't be able to make computers, any computer monitors, any computer CPUs, all stop, all GPUs stop, all weapons, military weapons stop. I mean, when I say all, like 75, 80+% stop. Everything would literally just stop, just the same way as in the 70s, if you shut oil off, you couldn't produce anything. And so this is a very important concept, hurdle to overcome in your head, because once you grasp this reality, and that you'll understand the significance of what China's card is that they're playing right now. It is, in fact, the Trump card. It is, in fact, the same as Saudi Arabia and the OPEC countries back in the 70s, kind of with the OPEC cartel kind of shutting down the supply of oil, causing all the craziness that happened in the 70s in the US and the Western world, because it controlled a large portion of the oil supply. where China now controls a much larger portion of the rare earth manufacturing and processing capabilities than OPEC controlled oil back in the 70s. It's like at 90%, right? So essentially, China is Saudi Arabia and OPEC of the 70s of the 21st century. That is it, right? That hasn't really sunk into many people, but that's what it is. Now you can argue, did they overplay their hand? Did they pull out that trump card too soon, too quick? Who knows, right? They have their own things. And you got to understand, China operates, they've gotten to this point because they prepared for it for over 20 years. And they've paid a high price with scorching their own environment to build the process. You know, the kind of chemicals required to do this rare earth processing they wouldn't allow it in the United States or Europe anymore, right? Nobody wants to do it in their own backyard because it destroys your environment. Forget about actually building the capacity, which takes at least a decade to 2 decades to make. You're just toast, right? They have the monopoly of the supply of a critical ingredient you can't get around with for the electronic age. And so China has played that card. Now the US has other cards to play with, right? But it's not the same card as that. It can play the oil card with the oil sanctions and all this, but at the end of the day, China and Russia are friends. They can settle oil with each other. Same with Iran. And so, I mean, they are cards, but they're not the same kind of cards where you can just shut you off, right? For all of your pretty much electronic capabilities. And so that is the situation we find ourselves in. That is the situation we find ourselves going into the South Korean summit between, well, you know, Xi and Trump supposed to take place. And actually right now, Besant and his counterpart from China, Lee, is in Malaysia to kind of talk before that talk. And you know how this works, right? The number twos, they talk first and try to settle it out. And then if it works out, then the bosses come, they're not negotiating anymore. They're just there for the press and to sign the papers, right? The real negotiations happen now in Malaysia. Now, if they can't get it together, guaranteed they're going to cancel the meeting, right? They're going to cancel. And if they do get something there, which is the hope, then they will have the meeting. So in essence, if the meeting happens, that means they were able to figure something out, right? Because they're not going to have a meeting to negotiate. That's not, the meeting's there to just paper whatever they already agreed to. Now, coming back to the most recent news here is that the latest move by China, right, is that they have demanded that Trump completely capitulates, meaning all tariffs, just take it off, right? Then we'll talk about lifting the ban on rare. That's how strong a position that they're playing. And so who knows how it's going to go, especially when you have people like Trump involved. You don't know what's going to happen. But this is a very strong move by China. They're basically playing the OPEC cartel card in the 70s with the United States and the Western world, essentially. And ultimately, as of right now, they have the upper hand. There's no if or buts around it. And so this will all impact, and this is why you've seen gold rising over the past few years. It's been boiling up to this point, and this point is going to just continue to escalate, in my opinion. Now, let's talk a little bit about what's happening in the digital era, okay? So there's the geopolitical, the financial, and the digital. These are the three interrelated things you got to watch to kind of give you a roadmap of what's happening. Now, the geopolitical and financial are vertical pillars, right? They're interrelated, but they're vertical. They kind of stand on their own. Geopolitics and the financial system, they're related, but they're on their own verticals. Now, underneath it in a horizontal fashion is the digital area, right? The digital is what accelerates and innovates and creates new capabilities that didn't exist before in both of those categories. In essence, it's a catalyst for things to move. That is what the digital component is, and you have to look at this third part to see where we're going. And where we're going with this is, well, first thing I want to mention is China did complete its fourth plenum, which is where they do their 5-year planning. And going into this, it was quite interesting because like 7 generals, I believe it was 7 generals, and one of them was like number 3, right? Xi's number 1, there's a deputy, and then the third guy was Nixon. He was a Xi supporter, right? And a bunch of them were Xi supporters, all Nixon. So people think, oh, is there a coup d'etat or attempt to oust Xi and all that? But that didn't happen. The fourth plenum ended and Xi's still there. And they released their 5-year plan. And you have to really see what they talk about here, because the Chinese will actually carry out what they say they're going to do. And what they said, and the one thing that I will point out, there are 4 points, but the main point here I want to talk about is with point number 2. They want self-sufficiency, right? I think they said self-efficiency, but I think they meant self-sufficiency with original innovations, meaning they don't want to be basically dependent on anybody else on the planet for technology and innovation, right? They want to be self-sufficient. Doesn't matter what the rest of the world does, they're going to be the best in the world by doing it themselves. That's their plan, right? And that's hugely important, because if you look at what they've been doing leading up to it, is exactly that. NVIDIA is gone from, and this is Jensen Huang himself saying this, from 95% to they are completely out of the Chinese market. Now, Jensen says that that's fine, like all their projections are based, assuming they're zero in China, to allay and not strike fear to his investors. But the fact that NVIDIA is just not even in China is a huge signal. That is China saying, we don't need you, right? And they actually put a ban on NVIDIA, like saying, Chinese companies using NVIDIA, you're going to get fined. So they're saying, we don't want you, and then we'll actually put a law in place where it's not only we don't want you, if you get caught using your stuff, you're going to get into trouble. That's how serious China is taking it. And so the question now is, rare earths will take like 10 to 20 years for like the US to develop capacity to process it. What about China with semiconductors? It'll also take them 10 to 20 years. Well, that's the common thought, like, for China to create its own technology to rival the United States and basically Europe and Taiwan, ASML and TSMC's chip manufacturing capabilities is going to take at least 10, 20 years. That's what the experts say. And I agree with them. If they were to do that, it would take 10, 20 years. But here's the thing. China's not doing, right, what the rest are doing. And this is what happens when you choke something, the thing that you're choking is going to get desperate and try different things that you would have never tried on your own because you're not desperate. But the one who's desperate will, because there's no other choice, they're going to have to try crazy stuff. They're going to try things, and through that is where the innovation comes, right? The innovation comes from that no choice, I gotta do crazy stuff type of mentality, which is what happens when you sanction a country. And what China is doing in the chip producing world is, look, I'm not going to go into too much detail here, but basically the West, ASML out in Europe, Taiwan with TSMC, NVIDIA has the blueprints for how to build chips. Look, they use something in manufacturing called EUV, right? And EUV, right, is that Dutch company, ASML. It's the only country in the world that can produce the machines. It's crazy when you think about semiconductor, AI, GPU chip manufacturing. It's three, right? It's ASML out in, the Dutch have this company that can do the lithography that nobody else can do in the entire world. Then TSMC is the only one that can mass produce it out in Taiwan. And then it's NVIDIA with the blueprint, right, on how to design it. And that's it, right? It's just those 3 countries, 3 companies, essentially, right? And what China said, okay, that's the current technology, EUV, okay? Well, we're not gonna beat. We'll give that to you, all right? We'll give that to you. We're not gonna do EUV for us. What we're going to do is we're going to do other techniques. We're going to see if we can improve on DUV or even look at new technologies like NIL, which is nanoimprintation lithography, which the other countries recognize as the next generation, that they're also doing nanoprinting lithography, right? NIL. And so what China's doing is saying, like, look, you got that old existing tech, yours. We don't care about it. We're not going to compete with you, EUL. No. We're going to look at the next tech, and we're going to be the best in the next tech. That's what they're doing, which is, actually, if you think about it, it's pretty smart, right? That's kind of what they did with cell phones, right? They bypassed the whole, like, email. Like, nobody in China was email. It was all, they were the ones doing mobile phone to mobile phone payment before anybody else, right? Because they leapfrogged that whole, like, credit card, computer, laptop, email generation that America went through, right? So they didn't have all that spaghetti. They just went straight to phones and did straight phone-to-phone payment and text messaging. That's how China operates. Nobody does email in China, and nobody pays with credit cards in China. That's like the old way, right? Similarly, doing the same thing. This EUL tech, this old way. They're looking at the new way, just going to jump over it, right? Build the new infrastructure for this new way. And that strategy's played out for them, and it's likely to play out for them again because they have enough people and enough academic institutions and enough brain power, essentially, if you look at it. Look how many Chinese people are into AI to probably do it, right? Probably do it. So that is where they're heading. And that produces stuff that comes right from left field. Nobody thought it was going to happen, but it did, like DeepSeek, right? When DeepSeek came, I was like, oh my God, what was this? And then it was an innovation by China. So you can call it, they just took GPT and did some tweaks. Whatever you want to call it, it was a surprise. Nobody can deny that because of how cheap it was. And that came out of left field. Those are just straight up facts. Didn't expect it. It came and we're blown away by it to a degree. That caused the NASDAQ to tank that weekend, if you recall what happened. And there's going to be more of these DeepSeek moments. It's just exactly how I described it in semiconductors and all this. You're going to have these moments because you strangle them. So they're going to come up with crazy newfangled ways people who aren't strangled aren't going to think about. And that's where the innovation comes from, right? You got to have that stranglehold, that hunger. Another, example of this is just recently came out that they're working on this analog AI chip, right? This 1,000 times, I don't know, right? If you actually go into how analog chips works, it's not binary. It's like, a light switch is off and on. What they're saying is it's like a dimmer switch, right? That's the way they do compute. And the compute is like, there's different gradations based on physical, electric, basically properties, right, that they're able to measure instead of a binary 101 or on off. And it's not new, but what the breakthrough is the ability to scale it and build a processor around it is what's new. And supposedly they had a breakthrough. Whether it's a breakthrough or not, I don't know, right? But that's not my point here. My point here is not whether or not this really is 1,005. My point here is that you're going to get some kind of DeepSeek, some kind of innovation thing because they've been strangled, right? And I tell you, it's just a matter of time. There's no question about it because the innovation that'll come out of the stranglehold and desperation is just, if you have the enough base ingredients of intellect and academic and facilities to do it, it's just going to outpace the West because they're not as hungry and desperate. This comes at a time in the digital era where China just accused the US of cyber breaches, and that has led to, urgent dialogue. This is all going on this week, right? As, we're leading up to the Xi-Trump meeting in Korea. So there's a lot of back and forth in the digital area between China and the United States. And then the last thing I'll leave you with is in quantum computing, which the United States currently has a lead in, and Google just, with Willow, released a breakthrough, an over 100 qubit computation, which allows us to now actually, because of that breakthrough, we can actually kind of have a pretty decent guess on what qubits is required to break ECDSA and SHA-256, which is basically the encryption method for Bitcoin, right? And don't let all this conspiracy, we're not near yet. It's going to require millions of qubits. We're at 100 qubits right now. So it's not going to happen in the next few years. I guarantee you, we're not going to jump from 100 qubits to million plus qubits in a few years. Could that happen in 10 years plus? Possibly, but it's not happening tomorrow. So let's just get that out of the way. And, Bitcoin is, it's not a huge asset, right? Like gold's 30 trillion or something. No. If they're going to break SHA-256, all the banking systems, and it's all all the encryption and security going to go gone, right? But it's not going to happen overnight. But this is something, again, China is focusing on. It said in its fourth plenum that it's going to focus on things like quantum computing, which the United States government and Trump, there's all this stupid back and forth now about whether or not it's going to buy stake in quantum stocks and quantum companies. But it shows you how important this potential technology breakthrough in quantum computing is with regards to national security, just because of the compute and encryption breaking characteristics it provides. So the digital area, you see all these things happening. It's not something that we can just avoid. We have to keep in mind all of these things that are driving the forces into the stock market and financial markets. Now, let's now talk about the financial. So what does this mean with the stock market and investments? Let's talk about it right now, okay? So first thing I want to show you here is, look, as far as the debt goes, okay, the United States we're now over 38 trillion. We added over 500 billion, right? Just in a month, okay? While the government is shut down, okay? we are going to easily hit 40 trillion. So this is just runaway, right? This is just runaway debt. So the point here is it's unsolvable. Let's all agree that this is unsolvable, that there's no way to repay the debt. So now the question really is just twofold, and we know the answer to this already. Let me just reiterate the answer to this. The United States will not tighten its belt like Argentina and go into some, very, very like reduced budget and spending program and super austerity that's required to pay the debt off. It's just not going to happen. What is going to happen is we're going to inflate the debt away as much as we can and try to stave off what they call a soft default through inflation / hyperinflation. That's what they're going to do. And that's why Trump wants interest rates to get lowered. There's only one way out, and that is happening. The question is how fast, and will there be hyperinflation or not? Or what is that pace of it, right? That's the only question. Everything else has already been settled. If you think anything else, you got to wake up to reality. And so having that, and that's the first thing I want to just set everything up in, is that we are entering into that state. Now, in that scenario, what we're seeing is that investors, as the economy kind of slows down, and I'll show you, and everybody's feeling the pain of inflation, higher prices, certain asset classes, because of the money printing, go up. One of them has been real estate, right? The rich get richer there. And the other is in like stocks, right? People plowing into stocks, and stocks keep going up, up, up. And if you look at it, people are just borrowing. This is margin debt, okay? So this is money I'm going to borrow to buy more stocks, right? So it's like leverage upon leverage. I'm going to take a loan out to buy more stocks and then like leverage that and just repeat and rinse that over and over again. We're at over 1.1 trillion in September. We're probably over that now in October. And it's the highest it's ever been, okay? Whenever we have this activity of I'm going to take a loan out to buy more stocks, and you do that to a point where it's a new record, bad things happen, right? Bad things happened back in 2000, bad things happened in 2007, bad things happened in 2018, bad things happened in the COVID crash. And the question is, will bad things happen now? And the chances are yes. Can somebody time this down to today? No. Is it going to happen sooner than later? Absolutely. So those are some of the backdrop environments that we got to understand. We also have to understand that if you take and this has been discussed around, I'm just going to bring it up here briefly, but if you take AI out of the economy growth picture, economy hasn't been growing. Everything has been stagnant except because of AI. And if you look at AI, what's been fueling AI is debt. Let's take more loan, private debt, and we'll talk about that. More debt, pile it up, more data center. And then this like circle jerk going on between a few AI companies. That's what's basically it. Everybody else outside of that picture, not feeling good, not feeling like a billionaire, feeling poor because of inflation, not sure about the job situation, which is going down. And that's the average person's setup, right? Instability, insecurity, except for AI. Now, if you look at AI, this chart is just astonishing. 14% of all IG is investment grade. Okay, so like this is like top tier debt. Okay, the stuff that's marked as, if you remember 07, 08, the AAA, right? The good stuff. The stuff that Wall Street says is good. Okay, 14% of that is tied to AI, right? One sector within a sector has 14% of all investment grade debt. That is a concentration of a concentration of a concentration. That is like balancing an elephant on a toothpick. Everything is on this toothpick. That's what it is. That toothpick, like any wobble or breakage of that toothpick, elephant comes falling down. We have never been this concentrated into such a tiny subsector in the entire history of the financial markets to this level as far as the debt markets go. And then what's crazy is if you look outside of the debt markets, you'll see the equity markets and all the other markets also concentrated to AI. Everything is concentrated to AI. It's crazy. Any little sliver of this, the whole thing, I mean, you talk about a house of cards. Imagine building a house of cards under a toothpick. That's a better description than the elephant. This is like 07, 08, but then multiply that multiple times into a toothpick supporting the whole house of cards. And you know, they're doing the exact same thing. They're doing the exact same thing that we did back in 07, 08. And as I mentioned, now we've seen many of the circular circles that are going on between the AI companies, but this one by Morgan Stanley was pretty good because they actually have up-to-date numbers showing the circuitous spaghetti of these few companies just funneling stuff around each other and going up, 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 up. It's amazing how people look at this and say, it's fine, it's okay, it's good, makes sense to me. Meanwhile, in the digital currency world, we have Bitcoin. And so I brought this up the last time. This is why I think the high was in October 6th, because every time you go from all-time low to all-time high, it has been the cycle of 1,000 days, 300 days, 1,000 days, 300 days. So this person back in, what is this, 2023 said down to the date, October 6th, 2025 was it. And so far that has been true. And if that is the case, we're going to go down probably until October of 2026. And if we look at Bitcoin, this was literally October 6th, the high. This was October 6th, right? And ever since then, we've done this. Will we go up? We could, but if what this person is saying, we're going to go down until 2026, and that's what I do believe will happen to Bitcoin, and maybe will present some great buying opportunities along the way. Now, going into gold, now people, okay, so I avoided that whole huge gold drop, right? Which is great. That's a whole, if you see my early videos, I've been preparing. And, that's why I sold my physical gold, and I was basically riding paper gold all the way up to the top. And the day before it fell on Thursday, like I said in my screenshot at the beginning of this video, I said, I'm in a cash. I think there's a top. Well, it did top, right? And it came crashing down quite a biggest drop in 14 years for gold, right? That's a big, big drop. Doesn't happen in 1.5 decades. And so I was able to avoid all that. And there are now people saying like, oh, gold bubble burst, that's it. I mean, look, guys, the bubble and gold hasn't even formed. We're still in phase 1. Like I've always said, phase 1 is gold leads first. Phase 2 is when silver takes over gold and starts vastly outperforming gold. We're not there yet, right? We're not there yet. And phase 3 is when the miners start taking over silver and start outperforming everything else. And that's when you go into the manic phase, and now it's not attached to fundamentals, and they just go. And that's the phase 2. We're so far from that yet, right? So no, we're not at the top of the gold secular bull market. We're still in phase 1. We're trying to do the handoff to phase 2 where silver takes off. The handoff kind of didn't have a good beginning. Silver hit 50 and then went back down again. So here it needs to get some more energy to go back above 50. And the one thing you should just look at is the gold to silver ratio, because what happens, as I'm saying, is when silver takes over gold and starts appreciating faster, that's when the ratio goes down, right? Right now, the ratio is still too high. There's never been a precious metals secular bull market that ended with the ratio here in the 80s and 90s, right? No, this is usually in the beginning. They end when you go down into the 30s, right? Like here back in 1980 when silver really took off. Right? Or in 2012-11, when it went down to the 30s area. You don't end it when it's in the, so no. That's the simplest way I can explain to you why the gold bull run and silver and precious metals bull run is not over, and it's just, we're trying to figure out how to do the handoff to phase 2. And that's what I'm waiting on. That's why I got my cash, and I avoided the big drawdown, and I'm ready to do, my whole goal is to, rather than just buy and hold gold, by being able to time certain things like these and avoid big moves down, that I will actually end up with 2 to 3 times even more gold, right, than if I had just stayed still, which is the whole point, right? So anyway, we're not near the top by any stretch of the imagination. Now, did we make a bottom? I don't think so. Look, there's this resistance level in gold spot market, 4160, that seems to be a lid, right? Ever since that big crash. There's also support down here. So we're in this trading range, basically, right? And until this trading range resolves either to the upside or to the downside, I'm not gonna make bets, because again, nobody's a fortune teller. Like, if basically what I've been doing the past week is when we got near up here, I sold, cashed out, took profits. Here also, I took profits. When we come down here, I might buy some. I might buy some down here, right? Basically, trade the range until we have a clear breakout in one direction or the other. Do I think this could be a bear flag? It could be. We could do this and go another leg down, right, to clear it out. Could very well happen. Is that the top of gold for? Hell to the no. In fact, they'll present great buying opportunities. But trade some technicalities here, right? Don't be a complete moron. There are a lot of things also lurking in the market, and I'm just going to go through this quickly. Like the regional banks, right? They vow they're one-offs, but last week we saw the regional banks completely collapse, right? And they're saying like, oh, these bad loans they have is a one-off. Okay, yeah, Silicon Valley Bank Part 2 is not going to happen. There's that going on in the markets. If you want to believe those guys, then go ahead. There's also the credit market, particularly with subprime lenders, First Brands and Tricolors, they collapsed, right? They collapsed. Canary in the coal mine, you tell me, but I think there's something funky going on there, because when you get guys like Jamie Dimon saying that they're cockroaches, I don't know. There's probably not just one cockroach. Remember, this is what happened with subprime and the Lehman Brothers moment back then. Everybody's, oh, it's not, until it was. The other thing is you got to understand that look, this is crazy, right? U.S. credit card delinquent, so 3 months, right? Delinquent credit card payments now. We're getting close to the high of 07, 08. This is not a healthy consumer. This is not a healthy consumer. This is representative of reality, actually. And I tell you, this is probably going to go up because the consumer is struggling. Meanwhile, we got people in the stock market. This is a picture of what's going on. So Korea's turned stock trading into, I'm Korean, right? So my homies over back home in Korea are doing esports with stock trading. They have a huge party, right? There's a lot of people partying in the audience, watching these traders up on stage. And you got an MC going around with music and bright lights flashing, and they're just trading, right? Like they're playing a game, competing into each other. The stock market, it's turned into that. We're basically a meme land, right? We're so detached from fundamentals. It's turned into a sport. I mean, it's worse than a casino. You don't do esports in casinos. But that's what's going on. That tells you the kind of publicist froth we're in that is called the stock market. Now, I mentioned Jamie Dimon talking about, look, there's cockroaches, but there probably are cockroaches, right? And private credit, there is a debt bomb exploding there. The thing about private credit, now I used to work at sovereign wealth funds. I've worked in these $100 billion to $1 trillion entities before. So I've seen some of this stuff, right? They're the sources for a lot of the private debt. Right? They're the ones that are giving out. They're the creditors. It's not like BlackRock and all. No, the ones with the cash are actually pension funds, sovereign wealth funds, or really, really, really rich families, right? That's the actual sources of money. That's where the money trail starts from. And I've worked in some of these places, so I've seen it with my own eyes. The amount of private credit and debt out there is opaque because it's not public, so it's not reported on. These are on private balance sheets that nobody has to report or make public. It's huge. Nobody really knows what it is, but it's huge. And a lot of it has gone sour. And a lot of this private debt, what they did in 07, 08 with mortgages, they're doing with this opaque private debt that nobody knows the total aggregate amount. They've been slicing it up and repackaging and slicing them and selling it and reselling it, collateralizing it, and all sorts of leverage stacked upon house of cards stuff that they did with mortgages and mortgage-backed securities in 07, 08. They're doing with private credit and debt. And make no mistake, when that blows, and it is starting to blow, we've seen a little cracks forming here and there, and guess how they're funding all the data center build-outs with AI. Oh, we're going to do $45 billion loan to OpenAI to build data. Where's all that money coming from? Private debt. Look it up. Now, CPI numbers came out, stock markets exploded higher, and I've dedicated an entire episode to this, and somebody at the Discord channel reminded me on this, and thanks for sharing that. The cell imputation in CPI calculation is a new high. We did finally hit 40%. Now, I'll just boil it down to you. Cell imputation in CPI calculation, you know what that means? They guessed it. That's literally what they mean. They didn't have enough people working, government shutdown, whatever the reason, Doge cut everybody and now there's not enough employees to do surveys. Whatever the reason, all of that data is saying is cell imputation or guesstimation, some of which is just let's take the last number and just carry it forward forever and ever and ever so it never changes, is now at 40%. 4 out of 10 numbers used to calculate CPI was either guessed or just carried on from the past as if it didn't change. So how do you believe the CPI numbers? 40%, new record. Think about it. Think about that number. So stocks rallied, and what we had in stocks was, we had been in this consolidation land, and what we had was this, a little blip up here above the previous all-time high. So, I thought the previous all-time high was here. Now we had a little blip above it, right? So now we are a little higher than 6,800. And the question is, what's going to happen here? We're going to go up, up, up. Well, to answer that, I kind of looked at the Wyckoff distribution schematic, which is, you have this kind of a distribution that goes on for a topping process. And I believe what we saw on Friday was a UTAD, or what is short for the up thrust after distribution, where a marginal new high is made after the high of the previous high before it goes into the last point of supply, LPSY, and it starts going down. Now, if you look at what we happened on last Friday, if this is in fact the Wyckoff distribution area, this rectangle where we went up high and new high, and then we had this UTAD, which is the up thrust after a point of distribution, which eked out a marginal new high just barely above, then one would expect LPSY to form and we'd have a rounding pattern in the S&P. Now, this could take, right, another week or 2 weeks or even a month or so for it to play out. But essentially, if we don't have fall through over here, we run a huge risk of it being a Wyckoff distribution, which is exactly what happened at the end of last year going into February before the collapse when the Trump tariffs first came out. So I'm carefully monitoring the Wyckoff distribution pattern, and look at the range of this. This is a huge Wyckoff distribution pattern, right? We're going from 68.20 to 6. That's a 300 point range of a Wyckoff distribution. That means if it does resolve to the downside, it's going to be a huge resolution to the downside. The last thing I'll leave you all with is we hit new all-time highs in the market, yet we're at fear. In fact, a little bit more fearful than neutral. So that's kind of interesting. We're at all-time highs, yet everybody's fearful. This is a weird and strange occurrence. It's not normal, but here we are. What that means is nobody kind of trusts this. You can claim that we're climbing the wall of worry and that we're going to continue to go up, but that usually doesn't happen at the all-time high moment. Usually all-time high moments is you're in not fear mode, right? But the fact that we're actually in all-time high with a lot of fear tells you that nobody trusts this all-time high, and that the market is really brittle, as we saw, that pretty much huge dump we had 2 Fridays ago, and that anything could just flip this market on a dime and we'll have another huge drawdown again. And so everybody's got their finger on the trigger, even though at the same time, they have no choice but to be in the market because it's going up. And that spells for a very, very brittle market that at any moment could just collapse. And that's something that I'm kind of expecting to happen based on some news-driven headline or whatnot. Who knows, right? Given, as I said, all the geopolitical things going on along with the digital warfare being fought, we are at this juncture where a lot of things, right, that are happening together can just at any moment go off and trigger a huge drawdown, and that's the environment we're currently in. So having said that, I hope this was informative to you. Don't treat it informally. And that you've learned a couple of things here. But look, things are accelerating, right? You can see it's like the walls are closing in around you. You see where we're going, right? And the acceleration and the pace is faster and faster. And each time it happens, it's a bigger and bigger deal. You see where this compression, where the walls are closing, it's compressing faster and faster. You see the financial system, people going into gold. It's just the beginning. That's why gold is in a secular bull run, right? Because when we have this, you want to have that outlet. China's building vaults around the world in Saudi Arabia and Asia so that they can settle payments in gold, right? Not the US dollar anymore. And then you can keep the gold locally, right, as collateral. And so we're already paving ways outside of the existing system. The Prime Minister of Singapore just recently got interviewed, and he's talking about post-America world, right? That the new rules haven't been written yet, right? But we don't know what they are, but we can't just do nothing at the same time. I fully agree with Prime Minister Lawrence Wong on that. Very astute statement he said, and something that I'm practicing and preparing for, and I think you should as well. So till the next episode, I don't know what's going to happen next week, man. Every week's crazier. But I'll see you in the next episode. Hope you have a good one. Peace out.